Have you ever had that nagging feeling the financial game is, well, rigged? That no matter how hard you work, you're playing by a completely different set of rules than the super rich? Well, you're not wrong. Today, we're not just talking about it. We're breaking down the hidden engines, the tax loopholes and exclusive assets engineered to launch the wealthy into the stratosphere. And I'm going to show you exactly how they do it. It's a feeling we all know. You work, you save, you try to invest, and it feels like you're stuck on a treadmill while you watch others blast off in a rocket ship. The gap between the ultra-rich and everyone else isn't just growing, it's accelerating at a mind-bending pace. As of early 2024, the top 1% of households in the US held about 30.5% of the country's wealth, while the entire bottom 50% held just 2.5%. Globally, it's just as stark. The richest 1% own about 43% of all global financial assets. And here's the thing, this isn't an accident. It's the outcome of a system with built-in cheat codes for people who already have money. It's not about working harder, it's about having a VIP pass to a totally different financial universe. So today, we're pulling back the curtain on that universe. We're going to expose the 4 main strategies the 1% use to build self-perpetuating dynastic fortunes. Understanding how this game is really played is the first step toward navigating it yourself. So, Section 1, the capital over labor machine. The first and biggest secret is that the 1% don't make money the way most of us do. While almost everyone else relies on a paycheck from their labor, the wealthy make money from their capital. What does that even mean? It means their money makes money for them, and it does it at a speed your job could never compete with. This happens by owning assets that kick off returns: stocks, bonds, private companies, and real estate. Here's a wild stat for you. The top 1% owns around 54% of the stock market, while the bottom 50% of Americans own less than 1%. Think about that. When you hear the news say the market is soaring, it overwhelmingly means the rich are getting richer. Their number one asset is stocks. And they aren't just dabbling in a 401k. They're founders, major shareholders, or they get into private equity and venture capital deals the average person will never, ever see. These are the high-risk, sky-high return investments where legendary wealth is born. This kicks off a powerful feedback loop. The more money you have, the more you can pour into these exclusive deals, which generate even crazier returns. Those returns get reinvested, and suddenly their wealth is compounding at a blistering pace. This is why since 1989, the wealth of the top 1% has shot up by nearly 300%, while the bottom 50% has seen basically zero net growth. They're not just earning more, their wealth is built to grow exponentially, while the average person's wealth, tied to a salary, grows in a straight line, if it grows at all. Section 2. The buy, borrow, die tax dodge. Okay, so making insane returns on your money is one part of the puzzle, but keeping it is a whole other game. This brings us to engine number 2, and honestly, it's the one that's the most infuriating. A system that seems engineered to protect massive fortunes. The rich use a set of perfectly legal strategies to pay a lower effective tax rate than many people in the middle class. The crown jewel of this is the buy, borrow, die strategy. Here's how it works. First, they buy assets that grow in value, stocks, real estate, fine art, and they just hold them for years. As these assets balloon in value, they pay zero tax because you only get taxed when you sell. Next, when they need cash to live on, they don't sell and trigger a tax bill. Nope, they borrow against their assets. Banks will gladly hand a billionaire millions of dollars at super low interest rates using their stock portfolio as collateral. And here's the genius part. A loan isn't income, so all that cash they borrow is completely tax-free. They can fund their lifestyle, start new companies, or even buy more assets, all with untaxed money. Finally, the masterstroke, the die part. When they pass away, their heirs inherit everything.
Thanks to a controversial feature of the tax code called the step-up in basis, the original cost of those assets gets erased and stepped up to whatever the market value is on the day of death. All those decades of untaxed growth, poof, vanished. The heirs can then sell everything immediately and pay little to no capital gains tax. It's the ultimate tool for passing a fortune from one generation to the next almost entirely untaxed. And get this, even if they did sell, their income from wealth is rewarded over income from work. For 2025, the top federal income tax rate is 37%, but the top rate for long-term capital gains is only 20%. For some high earners, an additional 3.8% net investment income tax applies, but even at 23.8%, it's still a huge discount compared to what's taken out of a paycheck. Section 3. The inheritance engine and dynastic wealth. That buy, borrow, die strategy flows right into our third engine, the incredible power of inherited wealth. Most of us expect to start from more or less zero. For the ultra-wealthy, that's almost never the case. A huge chunk of today's extreme wealth wasn't built from scratch, it was inherited. And we're not just talking about getting a check from mom and dad. We're talking about inheriting an entire wealth-generating machine. Heirs receive stock portfolios, apartment buildings that produce monthly income, shares in private companies, and the team of elite lawyers and accountants to manage it all. They're immediately dropped at the top of the financial food chain. The taxes that were supposed to prevent this, like the estate tax, have been seriously watered down. For 2025, a person can pass down nearly $14 million to their kids without paying a dime in federal estate tax. A couple can pass down almost $28 million. This allows even massive fortunes to transfer from one generation to the next, locking wealth inside a tiny circle of families. This isn't just about money. It's about passing down a permanent head start. The kids of the rich get the best education, access to powerful social circles, and are completely insulated from the kinds of financial shocks that can derail an ordinary person's life. It creates a kind of modern aristocracy where the family you're born into has a massive impact on your destiny, chipping away at the whole idea of a merit-based society. And 4, the access and influence loop. And the final engine that locks this all in place is the feedback loop of access and influence. Because extreme wealth doesn't just buy you nice things, it buys you power. First, there's access to the best investments. High finance is not a democracy. The most profitable deals, like getting shares in a tech startup before it goes public or investing in a top-tier hedge fund, are often legally off-limits to regular people. They're reserved for accredited investors, which is basically a fancy term for people who are already rich. So the rich get richer because they're literally invited to play a different game with much higher scores. Second, and this is crucial, that wealth buys political influence. The ultra-rich and the corporations they run are by far the biggest donors to political campaigns and spend billions on lobbying. This isn't a secret conspiracy, it's just a well-documented fact of our political system. That influence helps them bend the laws in their favor, pushing for lower capital gains taxes, weaker estate taxes, and deregulation. It creates a vicious cycle. Wealth buys power, power rewrites the rules to favor wealth, and that new wealth buys even more power. It's a closed loop that methodically funnels the country's economic gains to the very top, while everyone else is left to scrap it out for what's left. Look, breaking out of this cycle isn't simple, but your most powerful tool is knowledge. Understanding these hidden rules is the only way to start making smarter moves with your own money and to demand a fairer system for everyone. If you want more insights into the financial world that the establishment doesn't talk about, do yourself a favor, hit that subscribe button and ring the bell so you don't miss a thing. And now, I want to hear from you. Which part of this system drives you the craziest? Drop a comment below with your biggest financial question or what you think about all this. So, is the financial system rigged? When you look at how it actually works, it's hard to come to any other conclusion. There's one set of rules for people who live off their labor and a totally different and much cushier set of rules for those who live off their capital. From making money with money instead of a paycheck, to using the buy, borrow, die trick to legally dodge taxes for generations, to passing down dynasties with almost no friction, and finally, using all that wealth to rig the game even more in their favor, these are the engines that power the 1%. This is about being brutally honest about the structural advantages that are baked into the system. The road to really epic wealth is less about having a once-in-a-lifetime invention and more about expertly playing a game that's designed to multiply the fortunes that already exist. Realizing this isn't about being defeated, it's about being empowered. It's the first, most critical step toward demanding change and learning how to build your own financial security in a world that is by design fundamentally unequal.